Hello everyone. In last video we have discussed three basics of the trading which was really important, and today we're going to learn another two important topics, and now you're on the way to get a better version of yourself as a trader. The two important topics which you're going to understand today is first one we call what is a trend, the second one what is price action. And if you understand these two well, you will able to understand the price, understand the market, what is happening, and you have to stay focused in this video because this video is going to be a lot useful for you to understand the charts. And if you don't understand something, please let us know in the comment section. And what is a trend? A trend, when a stock price moves in a one direction consistently, it is called as a trend. And trend, there is a two types of trend. First one is uptrend or the bull trend or the bull market, and the second one is a downtrend or the bear trend or the bearish market. So what is uptrend? So when a stock price moves consistently in a up direction or upwards, it is called as a uptrend or the bull trend. And when a stock price drop or stock price continuously drop, then it's called as a bearish market or a bear trend or the downtrend. And trends can be found only on the chart, and there is a lot of reason behind it why trends happen, why the price changes. So we're going to study in upcoming videos. Firstly, you need to understand how to read the trend. For that, we need to go into the chart, and we are using investing.com chart again, and we are using the Tata Motors, and I showed in the previous video how to get the access for the chart. So now we are in the chart. So firstly, let's have a look at this chart. When you look at this, the first thing what you see, first thing we are seeing this downtrend, right? The price continuously dropping here. You can see there is a lot of red candle. The red candle make a strong bearish momentum or bearish market or bearish trend. You can see the price had a huge drop here, and after that it was recovering here, and next it's create another trend here, right? So it was falling, it is a downtrend. Now it's create another trend. So now the price moving in another direction, right? The trend changes now. It was in the bear market for a long time. Now it is changing into the bull trend or uptrend. So to understand this, let me take the drawing tool. So to get the any tool, any lines, horizontal line or the trend line, you need to go into this icon, what you're seeing. So click here and choose trend line. So we're going to use trend line. So if you draw a trend line, you can see the price moving in a direction, right? The price moving in a one direction, it's up direction. Now it is in a bull market. This is a uptrend. So this is how the bear market and the bull market works, and you can find the trends in any time chart pattern. Like now, right now in a 1 day time frame, right? If you break down into the 4 hours, let me go back to 4 hours. So when you break down the chart, you can see trends can be identified again. So this is how a trader can understand the trend. To understand why trends happen, why the trends going, when the trend changes, to understand it, you need to understand the price action. What is price action? So the next topic we're going to learn what is the price action. And before you learn that, you need to understand a main thing. A trader can approach a market in two different ways. The first way called fundamental analysis, and the second we call technical analysis. So he used two approaches to understand the market to invest. So in a fundamental analysis, trader can use a company's financial data such as balance sheet, PE ratio or dividend, a lot of stuff, right? Even a trader can study about the management of the company. Under technical analysis, trader will use some special tools which is indicators or chart patterns. So if you don't know what is an indicator is a tool that will give you a signal when the trend going to change or when to buy, when to sell. So there is a lot of indicators. So we're going to learn in the upcoming videos. So today we're going to focus on only price action. So there is only two types of approaches, for fundamental and the technical, and the price action is the part of technical analysis. So before I explain the what is price action, I would like to explain actually why the price moves ups and downs or why the trends happen. So in trading, it's really simple. The price moves because of supply and demand. To understand this, a best example is onion price. So if you remember, in this year earlier, the onion price went skyrocket, like 300 rupees or up to 400 rupees, as I remember, the price went for kg. Why? Because onion was 20 rupees. Suddenly it had a hike in the price because of only one reason, because of supply and demand. During that time period, there was no enough onions to supply all over the India. There is only limited onions, but we are Indians, we can cook most of the food required the onions, and we need the onions. And sellers understand there is a lot of demand for onion, but there is no enough supply. So because of that, they took advantage of it, and seller decided to hike the price, and we had no choice. We have paid a lot of money for 1 kg of onion. So this is the logic behind supply and demand, and the same logic applicable on the trading as well. So trading, it's a battle between buyers and sellers. One person sells and another person buys. So when you look at this trend, it is a strong downtrend happened. Here the traders decided to sell the stocks. There some reason they decided they're selling the stocks, and there is no enough buyers are available in the market. There is no one like to buy this stock. They tried here. There is a lot of buyers came and tried to push the price, but they couldn't. They didn't get support from other buyers. So sellers keep selling the stocks. There is only few people trying to buy. So that's why the price keep dropping. So when a seller trying to sell a stock, if there is no buyers available, then the buyers will take advantage. They will try to decrease the price. They will try to pay the low price. That's why the price dropped down. And the bull market or uptrend happens when a lot of buyers are available, but only few people are selling it. So nobody want to sell the stock, but a lot of buyers are ready. Then sellers will take advantage, like onion. They're trying to increase the price, and buyers, they have no choice. They have to pay the higher amount of money, and because of that, the price keep rising. So this is the logic behind uptrend and bull trend, why it works. And when we come back to price action, and price action is something that believed by traders. It's a psychology thing. And price action believed in a history chart patterns, like trader believe history repeat itself. So they will look at some certain points, specific points to enter a trade using a price action. They believe stock moves in a one chart pattern, one pattern, it create a pattern, and the pattern will repeat over and over again. So that is what traders believe. That is what trader price action trading come, and there is a lot of way to identify this point, buy and sell point. So we're gonna learn this slowly in upcoming videos. And it can be identified using chart patterns. So we're going to learn chart patterns, only few, which is really important. Technical analysis, people using a lot of indicators, but when it comes to price action, it's a naked chart, only few lines they used. And the main importantly, you need to understand why the history price repeat, why the stock price repeat. So let me draw a drawing for that. Let's assume the stock price dropping here, and for some reason the price stopped here and had a bounce here, okay, and again the price came here, and again here it went up. So right now what happened, trader observed this point, the price dropped here, again second time again it came and dropped here. So this point he will consider this as a support level. So price, whatever the price, it maybe it is 100 rupees, the price was 300, now dropped to 100, but it did not break the 100, again the price came and hit the again same time 100, again it bounced back. Next trader, what he will think, so he will decide to buy a stock. If it came and hit the 100 again, then buyers will come in, they will push the price, then what happened, the price will go again, so it will repeat. So you can see there is a pattern happen here, the price continuously touch this point and again it bounce back. This is called a support level. And also if you notice here, also the price had here touches 2 times, it touched this level, again it had a pullback. So this is called a resistance. So as a trader, he will try to take advantage when the price hit the support, he will try to enter a trade. And this is what a price trader believe, the price will repeat. So it's not only support and resistance, there is also another chart patterns you're going to learn. This is just an example how the price action works. And price action trading is really powerful, guys, and a lot of people are doing it, and it's a really effective way if you really master the skills. So next video we're going to learn how to master the support and resistance. And this is the video for today. Apart from this, we also have our awesome online course, which is 21 day trading challenge. It's already out now. So if you're looking forward to get this awesome course, all you have to do, click the link bottom of this video. So this course included advanced and the basic lessons, also awesome intraday strategy where you can learn how to trade intraday effectively. So if you're looking forward to it, click the link and grab the course today. Now hit the subscribe button, like the video, or drop us a comment. And thank you for watching. Have a good day.